Hi everyone, it's Patrick Reid from the Adamus Principle, and yeah, thanks for all joining me. Just a few people coming on. Just going to wait a few minutes. I just thought I'd just introduce myself, and um, just talk about who I am, what we do at the Adamus Principle, and a little bit about my background. Yeah, I've been trading for about institutional level for about 13 years. Before that, I was a retail trader, and I traded futures, spot FX, mainly buy side. Never worked in a bank, but mainly hedge funds and prop desks. So I would just say, if you're new to trading or you're a savvy retail trader, we can certainly offer you education and mentorship. I head up our team, and we've been in the team I head up have over 35 years experience in banks, hedge funds, asset managers, asset management companies, and prop desks. And I'm a prop desk trader. That's my background. So what I'm going to do is just wait a few more minutes, and then we'll just kick in, and hopefully people will come and join us. If you have any questions, I do believe hopefully my technical skills are okay. I do believe there is a Q&A section. You can catch me on LinkedIn. I do blog a lot. Patrick Reid, Adamus Principle, and we'll just take it from there. Okay. So today I want to talk about what I do really, and how I get set up, and how to really read a market, how to find an edge. And a lot of it is, I was thinking about how to sort of present this, and because I've been around a long time, I have to really boil it down to some simple rules. And I've been very privileged to be mentored by some big traders. Serge, who was, he headed up the G10 spot FX desk at HSBC. Adam Gazzoli is my business partner, a big spot trader from Standard Chartered Bank. Also, my friend B, who's great, ex-Goldman Sachs and Morgan Stanley trader, and and many others. Nat, who was HSBC. Lots of these people may not have heard of, but they were very important in my life, and they were my mentors, and they were people I learned a lot from. They just sat me down and took time with me. And this is really part of why I'm here, because, I head up the mentorship team. We provide mentorship and guidance and training, education. And really, I guess the next few slides is just going to tell you briefly about what we do and why us, and then we're going to talk about how to read a market, how to find your edge. And the thing that I particularly like, there are lots of things I look for in the markets, but the thing I particularly like, which is something I was taught by bank traders, is Confluence, right? Now, Confluence, I never really understood the meaning of the word, but Confluence is king. And Confluence essentially just means, look, let's just say you wake up in the morning and you want to trade, you want to go short euro dollar, right? You want to find as many reasons from as many different places to support your bias, to support you pulling the trigger on selling euro dollar, for example. And that's what Confluence is. The most varied sources, the best. Usually, most people use macro and technical, but there are lots of other things you can use as well. There's flows, there's positioning. There's the fundamental side of macro, so it's the data, you can use that. You can use news as well. You can use market sentiment, all this stuff is really important. It's something that I find, for me, has created my edge, and we'll come to my edge in a minute. And then essentially what I want to say is, one of the biggest things I quite like doing, and I've learned how to do really well, moderately well, is sniffing out a story. And I say sniff out the story like a truffle pig. I don't know if you've ever seen on the movies or documentaries about French truffle pigs. They roam around and they've got a very good sense of smell, and they hunt this very valuable asset, which is a truffle. And I want to be like that. That's what I try and be, to hunt out and to really find the gold or the gemstone. And that is the macro, that's the story. So I want to just really bring it topical right here, right today. It's the 15th of July, and in London, I woke up, I'll give you an example. I woke up this morning looking at the headlines, the sunny states in California, COVID-19 cases exploding through the roof, right? Donald Trump saying that the special privilege in Hong Kong is that's been taken away. Now, if you don't know what the special privilege is, it's upon the understanding that Hong Kong is, and it is autonomous to China, and therefore it bypasses taxes that America taxes China. Okay, so that's been taken away, and more to come. Now, you would have thought that would have had equity sell-off and risk currency sell-off. But oh no, the market ignored it. I feel that's wrong. But what they did not ignore was the Moderna vaccine trials, and the fact that some of the trials had neutralizing, well, all of the trials had the recent trials had neutralizing effects of COVID-19. That's just a vaccine trial. It's not mass produced yet. So the key thing here is to respect the market, and that's the story of today. I just want to share that with you. And it's really interesting because it's something that, despite me feeling it's wrong, I'm now not going to be selling risk, just because I look at the Dow Jones, I look at the S&P, I look at Aussie dollar, I look at the way the dollar is weakening, I look at emerging markets, all point to risk on, dollar weak. That's just something I wanted to tell you today, and it's an important point to find the confluence and to find the story, okay? So I would just say, look, hopefully along the way in the presentation, I will do my best to set out some macro versus micro views. I'll give you some credible sources. A lot of them are free. And in many ways, it's really difficult because a lot of it is free. There's a lot of noise, and there are some really great credible sources, but don't be the victim because it's Bloomberg or Reuters or CNBC or whatever, BBC News or whatever. Don't believe that all of those stories, although they might be truthful, don't believe that they're relevant, that they will move markets. So I would always try and use macro, micro, and technical all together. Try and use a wide variety of sources and realize there are certain source materials that play favorites. A bit like the favorite kid at school, giving the teacher an apple, right? So, for example, Wall Street Journal, great source, really doing it, really nailing it on inflation narrative. Bloomberg, great on COVID-19. CNBC actually used to be really not very good in my eyes, post 2008. Now CNBC are really producing some really good journalism, really good reports. So, especially with the tensions in Hong Kong and potentially Taiwan as well. So just there's always something bubbling away, and each source will take the lead and then come back down. So just bottom line, look at everything, right? So who are we? Who we are? Spot FX traders with over 35 years experience in hedge funds and banks. As I said before, I'm buy side. I used to trade at Tower Trading, which is the biggest prop desk in Europe. traded my own risk. I traded the prop desk risk as well. The team I head up have all worked in tier 1 banks. Many of them have run desks in G10. So together we've got both sell side and buy side experience. These are the places we've worked. Okay, you can see Tower Trading here, Goldman Sachs, HSBC, Standard Chartered, the World Bank, JP Morgan, Morgan Stanley, UBS, Credit Suisse. Okay, I've been doing this job long enough to have grey hair coming out of me, and I've survived. And hopefully, some of that wisdom will come out in today's session. And you know, I hope some of you take some value out of it. This is what we do. We teach traders at all levels, right? We provide one-to-one bespoke mentorship, and we also seed traders into prop desks. We financially back them as well. If you complete our mentorship course, we will financially back you. We're expertise which lies in assets or region. So FX is our home, but we have expertise in credit, bonds, credit, fixed income, i.e. bonds, equities, money markets. So, you know, as an FX trader, what I find is I look at everything. Inflation assets, and by region, emerging markets, G10. We have a crosses expert. If you don't know what a cross is, well, hit me up on LinkedIn and I'll explain. And risk management, right? You get nowhere on risk management. Okay, so we're very hot on risk management. Just a little taste of what we do. Some of our team are gifted with PhDs. Not a prerequisite to be a good trader or to survive in this game, but some asset classes do require a certain level of knowledge, and you know, we're just very lucky to have that on our team. We are traders, outright traders. I trade every day myself, our team does. And spot effects, fixed income and equities are the three main prongs we look after. Spot effects is really where we excel in. We are macro experts, technical experts, but I have a favor on macro, US macro, and rates, interest rates. So I'm across Euro-dollar futures. I'm also across OIS, any kind of cash curve as well, long-term interest rates, and emerging markets, as I said, monetary policy, G10, and central banks. We have a few contacts there. So I just want to kind of really keep it simple. Many of my students often ask, Patrick, how do I read a market, right? And this is what I say, just keep it simple, right? There are millions of indicators, technicals, and you know, from fibs, Bollinger Bands, trend lines, trend channels, RSIs, MACDs, all this stuff, right? ADX, market profile. I've done it all, right? I've done it all. And I'll have to say, I stick to 3 or 4 things which have stood the test of time over the years. And these are things that my mentors have taught me as well. But before you stick in any technical, what I would suggest you do, have a naked market, have a clean market, right? And just have the chart with a price. Stick it on the daily or 4 hourly. I don't generally go hourly because it's a bit noisy for me, but any time frame counts. And ask yourself the following, right? This is how I read it from left to right, okay? Let's just take the the most complicated pair, the euro-dollar, the most liquid. Let's just take that. Ask yourself, what is it trying to do? What is the market trying to do? How well is it doing it? And what does the market have to do for you to change your bias? So euro-dollar is going up today on the 15th of July, right? It's rallying. We all know why. Well, I've got a fair idea. So you're bullish, right? Okay, well, where would that have to be for you to change your bias? Would it have to go below 113? It's just a thought. These are the questions. There's no right or wrong answer. These are the questions you have to ask yourself. Now, is the market trending or consolidating? Well, Eurodollars, I would suggest it's trending. And then finally, after you've done that with a naked chart, after you've done that, I would put indicators and levels in. And here's the key, right? Put your levels in to form your bias, not to support your bias. Now, I would just take time to really understand that, because when I first heard it, I was like, what? What does that mean? When I wake up in the morning, I do my meditation. Not that I'm, an incredibly spiritual person, but that's what I do. It just sets me in a good place. Have my breakfast, do my shower, have my coffee. I need my coffee, and my mind is blank. Whatever happened yesterday, I clear it from my mind. So I put my chart up, then I have my bias. That's what that means at the end. That's what that means here. Because essentially, you need the market to tell you what it's doing. I could wake up today and go, look, I really want to be buying into this cheap dollar. I want to be selling into the euro dollar. I want to be selling Aussie at 70.60. I want to sell euro dollar at 114.50. I find that this dollar index around 96.03, that's a key level, and I think it's going to bounce from there. But hold on, I haven't seen a chart yet, so I can't say that. Maybe that's what I thought yesterday, but I didn't think that yesterday, but that's just what I'm saying as a kind of example. Turn your charts on, listen to the market. The market is all trying to tell you something. Your job is to listen, all right? So that's how I read a market, essentially. Now I'm going to turn on my live charts. I'm just going to really look at euro dollar. Okay, hopefully you can see that. And essentially, what you've got here is euro dollar at a key level. And all I do here, what I'm going to do is take off all of this stuff, right? There you go, all of this stuff. Just for the purposes of today. Now, it looks a bit different now, doesn't it? And it's almost like you get a pure view, because I haven't stuck a load of lines on it, you see. Now, I would suggest, if you're starting to learn how to read a market, I would suggest you start with this, and you read from left to right. So you just say, look, you put your arrow here, and you go, what's it doing? How well is it doing it? And you just play the story back. You play the tape back. And it may seem a long, laborious process, but if practice and practice every day, you'll just instinctively get it. So essentially, the market went down and then it went up. Yeah, it consolidated, trended lower. Consolidated, was indecisive because it bounced here. Then from this point to say this point, there was a slow grinding lower. I would say a slow dribbling leak lower. So you can see there's 1, 2, 3, 4 sections to this. And then this was obviously huge spike, and then this was the dollar squeeze lower. And now we consolidated, and now we've spiked higher. We held, then off we go again, all right? So you don't really, when you're reading a market, you don't actually need to know all the technical jargon. You just need to understand what it's trying to do. So what I'm going to do now, just because it's kind of my chart, I'm going to stick in some indicators. And I particularly like the fib from all the way down there, all the way up there. okay? And it's not to say this is the only fib. You can do any fib you want, but that's the fib that I particularly like. And as you can see, it respected that 111.88 there. I mean, I think the low was 76 actually, but stopped out a few week longs from 88. But 88 by and large held, and you can see it held here and here as well. And it was a resistance here and here, and there, failed off lower, yeah, and support here too. So it works, right? The other thing I want to stick in is the Bollinger Band. Kind of works for me. I quite like it. Now, if you are watching this live, you'll see the Fibonacci is 50% at 114.49. Guess what? We've paused here. It's now 114.42. So the Bollinger Bands and the Fibonacci's do work. Guess what? That was a mid-bolly there. The fib there works. Doesn't always work, but you know, like an old legend, chief technical analyst at JP Morgan and Morgan Stanley once said to me, all of it works some of the time, right? And you always remember that. So I just stick in some very simple stuff like that. And I know that at the moment we're pausing at 114.50. I'm bullish euro dollar, but if we crack above this, it could take us to 117. Now, there are various drivers behind this, but that's not really the purpose of this presentation. All we're looking at is price. Forget the macro side, which is important, but at the moment, we're just looking about how to read a market, okay? And that's essentially what I do, right? So let's go back to the presentation. So the next bit of what we're going to talk about today is how to find an edge. Practice makes perfect. I never really knew what an edge was, and then I realized I was kind of good at something, and that was my edge. That's essentially what an edge is. It's something that you're slightly good at, above average at. And for me, it's US macro. And I like data because I used to, as a futures trader, I used to love trading data. 9:30 in London, 1:30 in the US, and 3 o'clock in the US. If you're in Germany, it's usually 7 a.m. or PMIs are around 7:30, 8 o'clock in Europe. So I think Bunds used to open at 7 a.m., which was always a bit tricky. But yeah, that's it. So I'm going to talk about today, I'm going to talk about something that I use, excuse me. Sorry about that. This is something that I use quite a lot. Confluence is king. And it's part of my edge in macro as well, which is a bit strange, but it is. I really like data. Now, you can tell so much about the health of the economy by the hard data and the soft data. And I know what US GDP is. I know what we're about to get. Well, I've got an idea. I know the importance of ISMs. I know what to look through with certain elements of CPI. Just because I traded them for years and years. And they generally come out every month. So I know the kind of moves that you'll get for that. You know, the fact is, like, for example, now the US non-farm is being overlooked because we're actually only back to 30% of what we lost in jobs. So the market's kind of looking through any massive beat in the headline, right? Wages used to be really important. It's not particularly important now. So these things are just something through experience. But what I would say is I do like data, I do like technicals, but macro is a huge factor in my toolbox. I think any of the massive traders I know, and I know a few, all of them use pretty much macro and technical. And I want to show you something today which uses time frames and cross assets to get a level. And I'm going to do a bit of a euro-dollar case study. So this is a euro-dollar case study using time frame Confluence. Okay, now, this was taken quite a while ago. It was actually taken on the 20th of May, but it still stands up. I mean, imagine getting long there. It'd be pretty nice. So what I'm going to do is to basically say, look, have a level. Say you like a level, right? And this is on the 4-hourly. The level you like is, say, 109.63. Write it down here, 109.63 on the 4-hourly. Okay, bingo. Why is that a good level? Well, it's a Fibonacci. It's a 38.2%. Harmless little level, quite nice. On its own, it's okay. The market's stalling there, right? But let's look at some different time frames. Now, this is on the daily, right? Now, this is at the upper end of a triangle, right? And what level is that? It's 109.47, okay? And that's on the daily. So you've got a fib on the 4-hour, and you've got a triangle on the daily, right? Okay. So 47 to 63, right? So that, when I'm looking at Confluence, I usually give between 15 to 25 pips leeway because it's an area of stickiness, right? Now, this is the weekly chart. Have a look at this. At the time, and you can see the date stamp is 20th of May, same day, right? At the time, we have got, what's the level? 109.46. That's on the weekly, and it's the mid-Bollinger Band. And not only that, but it respected it before, previously here, see? So what does that tell us? Well, it tells us that this area is a place where markets have respected both buying and selling. And it tells us that, to me anyway, as a trader, it tells me if this hangs around this level for a long time, it's probably going to break it. And when it does break it, it will then, from resistance, become support. That's what that tells me. And I'm just listening and learning to the market. So from 109.46 to 109.63, I know it's an area of stickiness. It's an area that I need to know about. Will I sell there? That's my choice. Will I wait for a break and buy into that? That's what I did. That's your choice as a trader. But the fact is, this is an area where you've got buyers and sellers that respected it. Okay. Now look at this. As an add-on, this is the monthly, right? This is the monthly chart. Now, this 109.60 area is not, there's nothing going on there. But if you want to target, right? Say you're long at 109.63, you want to square your long at 10, you want to look for a square, then look at the Fibonacci, which is 61.8, and look at the mid-Bollinger Band, it's 111.88. Now, do you remember the very first chart I showed you with the Fibonacci? Let's have a look. Do you remember this? I'll put an arrow on, because I like arrows, I don't know about you. Now, what's that? $61.8 Fibonacci, you see? That's 111.88. So you see levels do work in various ways. So that's just a really quick, fresh, short version of one of the many things I use as my edge. Context, Confluence, and as you know, Confluence is king. There are many, many other things that I use, but this is just a really small example, okay? Oh, somebody's raised their hand. Let me just have a look. I'm just trying to go into some Q&A. Oh. Still trying to get to grips with it. But if you have any questions, my best suggestion is to email me. My email is at the end, or look me up on LinkedIn. I blog every day, and I'd like to give back to the market. You know, I was with, you know, I'm around, I'm active. So just please do get in touch. Yeah. Okay. So sniff out a story like a truffle pig. It all starts with a move. Right? Get that story. When you wake up, look at the previous session. I live in London, so my session's Asia. I look up, see what's Asia done. Any big moves, find out why they moved. That's your story. That's it. I mean, it's so simple. You can miss it, right? The question today, as I think I said before, Trump signing X order to end Hong Kong preferential treatment or positive results in Moderna trials. Which moved markets? You know already, it was the Moderna trials. This is something you can only really understand on experience, you know, just reading markets, understanding it. And sometimes, you know, the bottom line here is today on the 15th of July, today, the markets told me something. But what did they tell me? Well, they want to love a good story. They still feel a V-shaped recovery is on. I think it's premature. I think defaults will happen in the US. But I'm just little on me. You know, the markets are king. But when you understand that, you can make money out of it. So one thing I will say on the story and sniffing the story out is to say, look, you always use a variety of sources, but remember which, you know, each source plays the favorite whenever, and it never really lasts for a long time. Asset managers often like to buy and hold dips in equities. It's just kind of what they do. Doesn't mean they're right. Doesn't mean they're wrong, but it's just what they do. Now I've got a question for everyone. Which is the best source for news? Is it Bloomberg, CNBC, Reuters, Zero Hedge, or Forex Live? Have a think about that. I'll tell you at the end of the presentation. As I said before, you need all both. You need it's mainly macro and technicals, but look at everything when you trade. You know, what's the hot topic? You know, a couple of weeks ago it was Hong Kong. Coronavirus, very sadly, is you know, the market's really looking for a vaccine, and that's essentially what's driving everything. If we find a vaccine, it will change everything, both on a humanitarian level, but on an economic level too. And kind of finally, before you pull the trigger, remember they all matter, and finding your edge is up to you. It's taken me years of practice. And then I remember I was like, in my first year of trading, I was a derivative trader at Tower Trading. I was like, I don't think I've ever got an edge like that. And the head of the desk came up to me and said, look at your P&L. Look at your risk management, that's your edge. I was like, oh, seems to be okay. You know, I'm making money each month. That was my edge, you know. It wasn't like macro, wasn't technicals, and it was essentially my risk management. Here's the thing. Before you do find what you're good at, you're gonna find what you're bad at very, very quickly, because the markets will find your weak spot and they will hammer it home. Your job is to survive, because it just takes that resilience through risk management, getting a mentor, being for the long game. You're not going to make money very quickly. Very few people, many successful traders I know, it's taken them years, many years. So if you think you're going to make money in 6 months, I'm not saying you may not do okay, but if you're thinking of Ferraris, Lamborghinis, cigars and champagne in 6 months, then you're going to be mistaken. This job, it takes a longer period of time. Just put in the work, good risk management, learn everything. Read books, read my blogs. You can ask me anything you want. Your job is just to learn at a slow but steady pace, because your job is essentially to survive. So this is what we do. We try and have fun in our sessions. When we take people on, we try and bring out the Adam's principle in everyone. I'm wrong sometimes. Sometimes I feel I'm wrong more than I'm right. But anyone that says they've got the golden answer to everything in trading is frankly a liar. I've been very lucky to be mentored by some very big traders. I'm in contact with some very big traders at the moment, and they're the most humble people, the most curious, the most inquisitive people I've ever met, right? This is how I try and be. This is something I instill in our sessions. Play Sherlock Holmes every day, okay? This is my email, patrick@adamsprinciple.com. You can find me on the website. You can find me on LinkedIn. And, all I say is the session's slightly short. It was going to be about an hour, but I try and make it, short, punchy, engaging. Hopefully you found something you can take out of today's session. And, by all means, just take my email. I'll leave it on the screen, and email me if you want mentorship. Get in touch with the team at Scope Markets or myself on the following email. And if you do have any questions about working at a prop desk or getting financial backing or the mentorship we provide, please do feel free to get in touch. And hopefully we can help you on a new journey. Okay, thank you very much. Oh, we've got somebody in the Q&A. Okay, I'm going to answer that. There will be a recording, and I think their Scope will be sending it to you. So I hope that answers your question, Kolawori. Okay, sorry about my pronunciation. Still getting to grips with the technology. Is your question? There we go. Right, well, that's it from me, Patrick Reid, Adam's Principle. Thanks for joining me today. We've had a great turnout, and all of you, just take care and stay safe. Okay, thank you very much.